Welcome to Open House, the real estate and mortgage show on News Talk 580 CFRA.
With Frank Napolitano and Paul Rushforth, here is Steve Gregory.
Frank is away this week.
Yay! Thank God.
Not nice.
And we finally have someone with brains in his seat.
Lisa's back. Been a while.
It's been a long while. It has. Thanks. I'm glad to be back.
Have we changed at all?
My hair's black now.
No, we.
Again,
we
making a hair
gray.
comment.
Yeah. Lisa hasn't seen me in a while, and she's like, "You need to change your photo on the website. You still have blonde hair." And I said, "Well, I never had blonde, but
Well, you did.
those were called highlights, Lisa."
Did you have the strawberry highlights done?
You know what's funny is you see the gray in my beard right now. When I was playing hockey, I used to obviously have the playoff beard, and it was strawberry. Like it was like not red, but it was orange. I was pure orange as a ginger, and now I'm just a grayer.
What's more amazing than that is you made the playoffs.
Well, I must have good people around me because if it was on my merit, there's no way we're making the playoffs. Yeah.
So anything happened this week that will affect the market at all?
Well, yeah. Listen, what happened this week, and we're going to be talking about something different next week too, right? Something happens every single week, and we saw the Donald, go to work again. And
have you ever seen more variables than a spring market? Other than COVID, I guess.
No, and we haven't. Like, listen, when we went through COVID, I'm not going to say this is bigger than COVID because that's an irresponsible comment.
Different.
But I think this could hurt our market potentially more than COVID. I think it's hurting our economy potentially more than COVID. We're seeing countries now that are at economic war. The countries that have been partners and allies, not just the Canada and the States, but now you're looking at Mexico and China and all these different places.
No end in sight. Right
and there's no end in sight. And listen, I'm not going to get into politics because that's once again an irresponsible comment too. But whether you love him or hate him, whether he's doing good or doing bad, that's for you to decide. But I can tell you right now, it's definitely thrown our economy and our market for a loop. I said it last week, and I'll say it again, though. We've been through rough times. We've been through tough times. We've been tested. The word that's, thrown around all the time right now is uncertainty. And that is exactly where we are right now in a market of uncertainty. And we will come out of this again. Like I mentioned last week, we might have a few scratches on us, but we will come out of this. And, we are still seeing homes listing. I mean, the numbers came out. Our number of sales were down just over 6%, which is not uncommon, and
we didn't have a great March last year, though, did we?
No, we didn't have a great March last year. We had a tough spring. It was very delayed, but the average sale price was completely flat in March. It was didn't go up or down at all. But on a whole for the year, we're down 3.7%. Our average sale price is still up 1.7%. We have some areas that are hurting and some areas that are not hurting, but all in all, we're probably going to end the year with sales down a little bit, but we're going to end the year potentially with our average sale price up a little bit. But we're coming off a sort of a very average down year last year, so I think it has nowhere to go but up. But the one thing that we're very, very heavy on right now is listings. The active listings right now are up almost 60% on the market right now. So there's tons of listings. So, I said at one point, if you're looking to buy, that's your decision, but the metrics are very similar to 2017, where the number of listings were super high. Interest rates were fairly similar than where we were in 2017, maybe a touch higher, but not too much higher. So there's lots of inventory out there. So if you're a buyer and you have a strong job and you're not worried about losing your job, it is a solid time to buy right now with the rates, knowing the rates are going to come down. I'll let Lisa talk about that, but knowing the rates are going to come down, the inventory's there. It's a solid time to buy. Now people say, well, I'm not buying, I'm selling. What about selling right now? It's also a good time to sell because buyers are coming out of the woodwork to buy. And the only thing I can warn you is about a seller is you have to sharpen your pencil. You have to be realistic on price. You have to be realistic on condition. I met with a seller this week who wanted a grand slam for pricing, and I said, we're not in COVID anymore. Like, the grand slams are gone. Could you potentially hit a double on pricing? Potentially, but it has to show well, and it has to be priced well, and I've been saying that now for probably 2 or 3 or 4 months. If it's not, your home is not going to sell.
A lot of competition right now, right?
There's a lot of competition right now, but the factors are there that it's great for buyers, but it's not terrible for sellers either. But you just have to be realistic as a seller.
Where are we at for fixed rates with all this fun in the economy?
Oh, my gosh. Well, the rates, the uncertainty, of course. That's the word that we use all the time, too.
Could this be good for fixed rates? Will they come down?
I think we're going to see some movement. Yeah, I think we're going to see some movement probably soon. We're seeing a lot more movement, obviously on the variable and adjustable side. The discounts are getting better. Typically what happens,
where are we at for discounts?
So, we're looking, we had a bunch at 0.75. You can get some at prime minus 0.9. Depends what you're doing. The purpose of the funds makes an entire difference of what you can do. But typically what happens when we've seen historically Bank of Canada lowering interest rates, then we see the lenders start to cut back on the discounts. We've seen, the prime rate go down. We did see the discounts being cut back, but this past week, a lot of lenders are bringing them back again. So, I think we don't know what's going to happen, obviously, but there's been a lot of anticipation of the rates continuing to go down.
I love how they say, okay, well, prime is going to drop 20 or a quarter percent. Yet we're going to cut the discounts, 0.4 or 0.5. So I'm glad to hear that they're actually increasing the discounts. They
are. Keeping flexibility is going to be the key, no matter what you're looking at doing. If you have, depending on your situation, but keeping flexibility in your options and your choices, with the mortgages, that makes the biggest difference. So fixed rates coming down, although awesome on the front, it really depends on where you're getting your mortgage, the lender. What's the penalty going to be if you have to break that mortgage early? So, there's a lot of risk that comes depending on what kind of product that you choose. So
that can be humongous.
Yeah.
But the good news is the rates are coming down. The problem is as rates come down, usually means the economy is struggling a little bit, right? So, but it's, the inflation's, if you saw the unemployment, first of all, the numbers came out, the unemployment's going up.
Yeah, 33,000 jobs, crazy.
So what are we now, 6.7% or something like that?
6.7, but only 5.4 here.
Yeah, so but still.
We actually created jobs in Ottawa.
But still, they look at Canada as a whole, right? And then they narrow it down to Ontario as a whole, and then Ottawa comes after that. But
that's a good point, though. You always see that, and it almost feels like a little bit of fear-mongering, if I'm being honest, because in Ottawa, we are very fortunate, in the market I find that we're in. At least in my career, it seemed that way. We don't seem to get the same impacts that you see in other large markets or other markets across the country, period. So,
well, it's because we're a government town.
We've been busy. So, there are definitely people buying, lots of renewals. Gosh, if you're looking at renewing now, it's the time to start, this
what are
year,
people coming
year,
off of now when they're renewing?
Like the twos, the below twos, the mid twos. But there are people that, if you took a 3-year term, just 3 years ago, then you're in the mid fives. Or if you took, if you decided you needed to lock in or wanted to lock in for whatever the reason was, you're in the fives, mid fives, some sixes.
But people coming off those twos, where we were a year ago, it was like, gulp, like because they were coming off, high, or we were talking about high mortgages. So we've seen 7 or 8 drops in a row, which makes it more palatable now. You're like, sure, you're coming off a mid 2, but now you're in a high 3 to a low 4. Like it's not a killer.
No, exactly. Middle of the 4s. Canadians pay their mortgages, so it's seeing a lot more unsecured debt that we're needing to help with the cash flow management. That's the big thing. So it's not so much that people aren't able to pay their mortgages, at least not, again, what I've seen in my experience, but a lot of people are like, okay, I need to restructure. I can't afford my life because I've now been living my life on my other credit facilities, and that's where the killer is.
It's tough on buyers, but here's a silver lining actually for sellers as well. I met with a seller this week who, 2 years ago, their house was probably worth 1.3. Let's be honest. And they probably would have got multiple offers and sold it no problem. We were talking about now 1.1. They're like, oh, I lost all that money on my home. Mm-hmm. And I said, but did you? Because if we didn't go through that crazy period where our market went up in 2 years, 50%, if we didn't go through that crazy market, you and I'd be having a conversation right now for low 9s.
Yeah.
I'd be telling you your house is worth 9.25, but I'm sitting here right now telling your house is 1.1 to 1.1.5. I said, did you really lose? Yes, if you would have sold 2 years ago, that would have been great for you. But keep in mind, what you're now buying is probably $100,000 less than what you would have had to buy. So it comes out in the wash. And it wasn't until I put it that way to the seller that the seller was like, oh, yeah, so I'm actually doing okay. And I said, and not to mention, when you got your mortgage was at, 1 point something or 2 point something. So you've been drilling away at all that, increasing all that equity, drilling away at all that principal. So you had an advantage right there. And you took advantage of 50% in 2 years. The average sale price went up. You took advantage of that too. So let's not look at what it could have been. Let's look at what it is right now and what you should have bought at that price.
What did we gain in that time? 5 years? 10 years?
Oh, 50%?
Yeah.
keep in mind, in Ottawa, we go up anywhere between on a great year, on a decent year, anywhere from 2 to 4%.
Yeah.
And we went up 50%. So do the math on that. We might have gained 20 years at that point. I mean, 2 or 3 years ago, townhouses in suburbia were in the threes.
And you can't buy a cottage for that now.
Well, whereas now, if you get a townhouse in the high fives, you're getting a great deal on a townhouse. So 3s to the 5s, that usually doesn't happen in 2-3 years. That usually happens in 10 years. You know, when I started doing the average sale price when I started doing real estate, I think was $270,000.
But were we not lagging at that point? We were lagging other major, centers across the country. So we caught up.
Yeah.
Yeah,
we're still not even there. We still are, but at that point, we were by far the cheapest capital city in the world. And now we caught up, but we never caught up to the Vancouvers and the Torontos and any of those. We're still a very affordable capital city here in Ottawa, for sure.
Absolutely.
521-TALK, 521-8255. We will be right back. Come back. Paul Rushforth is here. Lisa Belanger here as well. First time in
a long time.
A decade? Is it a decade?
Probably. I don't think it's that long, but it could be.
It's been a long time.
It's been a long time, for sure. Several hair color changes for me.
Me too.
Me too.
Just kept getting grayer.
I just went to one hair change. I just went from jet black or whatever I was.
10 years ago, I had 50 shades. Now I have 100.
Yeah, exactly. Yeah.
Question from Joe, who called in. Recent retiree. His mortgage is coming up for renewal in October. His wife is still working, wants to know if he can get a decent rate in a mortgage.
Absolutely. For renewal?
In October.
Oh, yeah. I mean, the renewal rates right now are decent now. So, October should be even better. You can't renew it. You can't lock it in right now. I mean, 120 days, 130 days is typically the point where you could look at least transferring lenders. Some lenders let you renew early, but you should absolutely be able to get a really good rate at renewal.
We may have a couple of more drops by then.
Oh, I think so. Yeah, I think we're going to have several drops before then. Yeah.
I guess it all depends on the metrics, right? I mean, like we saw, they just came out with the unemployment. Inflation's coming out. The tariffs are obviously a major factor in what's happening. And as the market gets tougher and tougher and tougher, rates eventually have to come down. I think if you saw in the States, Trump, of course, decided to throw more hot water on other people in the States. And he says, I've done this for us. I've done this. I've done this. I've done this. I don't know the guy's name, but when is the guy in charge of the mortgage rates or the interest rates going to lower them? Is he not in politics? Get this down. And he's basically saying it's now time to get the rates down in the States. Well, we know we follow the States very closely. The rates in the States come down. We're most likely coming down too, but we're based off here. We're based off what's happening with unemployment, inflation, what's happening with the tariffs. And we know it's all looking like bad news right now. So
it is. But I mean, on the rate side of things, we're pulling away from the States a little bit more.
How far can our gap get, though, before it becomes a problem?
How far can we go before the rates become a problem? I mean, 1%, 2%.
Oh, the
gap.
Yeah.
I mean, I think it's just it's a new phenomenon that we're seeing. Like, we're not usually this far apart. We're usually relatively, close.
Yeah.
But, we're at an interesting time in history, period. So, lots of things are going to be different than they were before. So
when's the last time we saw
looking at world markets?
When's the last time we saw the States and Canada at like an economic war?
It's unheard of.
Yeah.
So, but, Canadians, what's not normal? What's not normal is 1%, 2%, on an interest rate. It's just not sustainable. Was it awesome? And could we pay our mortgages down quicker that way? Yes. But it's just not sustainable. We want our economy to be sustainable, and that's really what needs to happen. So rates will come down. I don't think they're going to come down to what they were when we were, pandemic times.
I think
for a fix, do you think we'll be low threes?
I mean, we're in threes now, the high threes for some, depending on what you're doing. Yeah. So yeah, I mean, I think in the 3 range is not unheard of, and it's going to be something that people could either lock in. I mean, if you go adjustable or variable and the prime rate keeps coming down, you will be below that if you get a really good discount. And that's the key. If you're getting an adjustable or variable rate mortgage, you want to lock in the best discount that you can.
Good idea to lock in that discount right now?
Yeah, as early as you can. If you're considering going adjustable or variable, you definitely want to lock in those discounts early because, again, the lenders start to pull those back, the more the Bank of Canada tends to lower. I mean, that's usually what's happened, but
I find every time they lower prime, the discounts lower as well, and then they start to increase again. So at least
they pull them back. Yeah,
Lisa just said they're back to increasing right now, so it might be a great time to lock in.
And again, I think it's because there's the next rate announcement coming on the 16th. There's
50-50.
Well, I mean, even less than that. I think that they're thinking it's going to hold, but again, that's today. What happens on Monday could be completely different.
Well, Frank said last week that there was a 25% chance that they were going to drop a quarter point.
Now it's 60.
Now it's a 50-60% chance, and that's in 1 week. We might be talking next week being like, oh, it's a 100% chance they're dropping a quarter, or we're going down a half. Like, who knows?
Yep.
Who knows? It all depends on the metrics, what comes out.
521-TALK, 520-255. Let's go to the phone. Say hello to Jack. Hello, Jack.
Hi, everyone.
Good morning.
Anyone can answer. Can I ask two quick questions?
Sure.
Okay, number one.
That'll be three, though, if you count that one.
Thank you. Okay, you just threw me off.
Take your time, Jack.
Well, I know what poor Frank goes through.
Yes, there we go.
Okay, now all seriousness here, and I want honest answers, please.
Sure.
We don't lie on this show.
You know, Paul, especially from you, okay?
Okay, well, like I said, we don't lie on this show.
No, okay, good. Okay, so I a lot of buyers, a lot of sellers, first-time home buyer. I want to know, is it better, to have a first-time home buyer savings account or TFSA? And whatever you answer, I respect that. And second part to that is, should a young person wait until we see who's forming the new government with these first-time homeowners, discounts? And if you guys can elaborate, please.
Well, I'll let you answer the
first home savings account versus TFSA.
Yeah,
that's actually a really great question. It really depends on the timeline. The first home savings account is an absolutely phenomenal account if you're looking at buying in the next 15 years, and that's what's going to be key. You're going to get all the great things that you get with an RSP and with the TFSA. So you're going to get your tax deduction. You're going to have your income growing, tax sheltered as well. And you can use those funds exclusively, obviously, for purchasing a home. But you got to make sure that you're doing it within the next 15 years. I mean, it's not the end of the world if you don't. You can convert that right into your RSP or TFSA later if you decide you want to.
How much can you put in there now?
For the first home savings account? You know what? I don't do that side of things, but I think it's up to...
It's gone up, though.
I think it's up. It's $8,000 a year for sure. You can carry it forward 1 year. So if you open it this year, you don't put in $8,000, you put in $4,000. Next year, you can do your 8 plus your 4, but then you lose that going forward.
Right.
So you can't just keep carrying it forward, but it's $8,000. And I think it's up to $40,000 lifetime, I believe.
So that sounds like a great product, obviously, for first-time home buyers. And I agree with Lisa. I think it's a great product if you're using that for sure. And then to answer your question about, different parties, promises, things like that. My biggest issue is I never put a lot of weight in what people are promising with each party because I've seen it go by the wayside as soon as they get elected. But I will tell you, I was very, and I want to first preface this by saying I am not endorsing any party. I'm not saying which way to go, but I will tell you something that I heard yesterday, which was very promising, but I've heard it many times by many parties, was the fact that Carney did come out and say that his plan is to build homes like we've never seen before, which was very, very promising. But then again, we heard that from Trudeau. We've heard that from Poilievre.
I think they all have to say that.
They all have to say it. I mean, we do know we have a housing crisis. So as far as what people or what platforms being promised by these governments, I would have a bit of a wait and see to see if any of these actually take effect. But I do like what they're saying. It's very promising about they want to put building homes on steroids. But what we've seen over the past is those steroids have gone the wrong way and building homes is next to impossible.
But with all these tariffs, they're going to have to help them out somehow.
Well, they have to. They have to. I mean, we've seen, they came out and they basically said new home building in the States right now has gone up. I can't remember what the number was, but it was something extraordinary that they've gone up. So now you want to buy that $500,000 house. Now it's potentially, $530,000, $540,000, which takes a lot of first-time home buyers out of a lot of product and takes a lot of home buyers out of a lot of product. Here in Ottawa, like I mentioned last couple shows, the builder I work with Clement Homes, with Charles Clement, they have actually gone to all Canadian products, so there's no tariffs on these products, with their HVACs, their coppers, and their wires and things like that. And they've also locked in pricing for a number of years, which is also great. And I think a lot of big builders and a lot of medium-sized builders have followed suit. So I don't think we're going to see the drastic increase in pricing of new homes right now, where we might see the drastic increases from the municipalities and from the governments, increasing things like permits and increasing, the soft costs.
Can't do it.
They've already done it with the way they're doing it. And I'm maybe I shouldn't comment, but I know certain areas where they've increased the soft cost to get into before a builder even puts a shovel in the ground by almost 100%. So they're really hampering builders. And this is why I say it was nice to hear Carney come out and say, don't get me wrong, Paulie have said the same thing, that we're going to build on steroids like we've never seen before, which is amazing, but we haven't seen it happen yet. And I know for a fact that the municipality and the governments are increasing costs on everything. And now there's a potential of things going up to build homes. Saying that, I think we're going to be in much better shape in Canada than we are in States. But if you want to know about which party's promises are the right, I would wait and see which actually brings in these promises.
And you say Frank can talk.
Sorry.
521-TALK, 521-8255. We'll be right back. Come back. Lisa's here. Paul is here. Frank is, can I say where Frank is?
I don't see why not.
He's in Iceland.
Yeah,
so
got
cool.
a conference in Iceland. Who has a conference in Iceland?
He's at a 10-day conference in Iceland. It's a long conference. My God.
They just this morning actually they just got off snowmobiling on the. Oh my gosh, he just literally told me. He's probably going to text me and tell me because I just don't remember what it was. But I know yesterday they were four-wheeling or the other day on the tundra, so that's pretty cool.
That's very cool.
Yeah.
Quite the seminar.
Yeah.
Well, it's
they're learning. They're learning They're
it's awesome.
Yes.
Yeah, it's a
they're
bunch of top
calculating how much
brokers.
fuel you need in your snowmobile to travel.
Listen, little different when Frank's in Punta Cana in his conferences and they work from 9 to 9:22 in the morning.
We do actually have to work longer than that.
9:23. My bad. Sorry.
Where are we at for first-time homebuyers knocking on your door these days? Are they looking for approvals? Are they starting to get a little antsy to get back into the market now that things are coming down a little bit, at least as far as rates go?
Yeah, I definitely found an uptick in people looking at getting into the market, wanting to buy. People that have been waiting. So I know I've had a lot of buyers in general, but first-timers for sure are starting to come back out of the woodwork. A lot still need help. A lot still need either co-signers, gifts from parents or grandparents, something like that.
By a lot, would you say 20%, 30% more?
I think the
maybe
number
not
at one point,
more,
at
but
one
it was
point
about
30.
50 or 60%. I think in my business anyways. So it really depends. But yeah, there's probably about 30% that still need it. The great thing though is that we've had some great changes that have come out for first-time home buyers. So they can now go up to a 30-year amortization, and that really helps affordability. And they're getting the insured mortgage, and they're getting the best rates. So all of those things really help with the affordability. So I think in finding something that you really like and find that house. If you're finding those homes where maybe the prices have gone down a little bit, find that home, perfect neighborhood, then look at improving it. I think I talk about this every time I'm on, and I'm glad it wasn't yesterday that I was on and I could still talk about it. But Purchase with Improvements is still a really good and a really popular program that people are using to get into those homes that they really want to have. It's the perfect street, the perfect house, but maybe, the inside is not exactly what you want. A lot of first-time home buyers are looking at doing programs like that so they can make it their own, but they're buying in an established neighborhood, and then they can get the 30-year amortization to help them qualify.
Well, and the beauty of those homes, too, is those homes in today's market are sitting a lot longer than homes that are done to the
you
nines.
want to beautify it, find the neighborhood, find the street, make it perfect.
But the problem being is we're in a market that nobody wants those properties. So if you're saying first-time home buyers are looking for those type of properties, which they are to an extent, if they use that program, because not a lot of first-time home buyers have that extra money to sock into doing floors and kitchens and bathrooms. But
they don't need it. They add it to their mortgage.
That's right. So they're doing that program, Purchase Plus Improvements. They can use that. But yeah, we're still in a market right now where most buyers are looking for things that are turnkey. They're not even looking. Saying that, if you take a look at days on market and how close people are getting to their asking price when homes are done to the nines, they're selling quick and they're selling right near their asking price. When you have something that's in rough shape and needs a lot of work, they're selling nowhere near their asking price and they're taking a lot longer to sell. In some areas, days on market are upwards of, 60, 80, 90 days on market if your home does not show well, where the homes that do show well in that area are like 7, 8, 9, 10 days on market, and how close you're getting to the asking price. In some areas, it's like 96% of asking price, but if your home shows well, it's like 99.9% of asking price. So we're in a market right now where the appetite for ugly is gone. The appetite for lipstick on a pig is gone. The appetite for turnkey and beautiful is there.
But your opportunity to make money is there to buy something if it's not already fixed up.
Yeah.
And so, I mean, education-wise, purchase with improvements, I think, is a great
Explain how that works.
opportunity. So it's essentially 2 draws. You get the draw to purchase the home. Title becomes to your name. And then once you finish the improvements, then you get the funds to pay that off. So typically, people will go anywhere from 40. Some lenders will let you add up to, $100,000 of improvements for the house. And they'll do it in multiple draws now, which is new. It used to be one or the other. You had to finish it all and then get the money. Now you can do multiple draws. If you have to pay for the flooring, then your $5,000. The work has to be done ahead of time. So that's the key. So we'll typically look at getting somebody also approved for a line of credit. Or if you look at one of those don't pay until, don't pay until later type programs, then you pay that off. You don't want to pay interest on that. Always pay that off, ahead of time before it's due. But then the mortgage is all advanced in the end at the same interest rate that you purchased it. So it's absolutely fantastic. You're rolling all of the improvements all into one, and it can really help sell those perhaps less marketable properties right now. And you get to make it your own because there's so many well-established neighborhoods, in and around the Ottawa area and in the outskirts as well that people maybe aren't looking at, as Paul just said, because they don't want to or can't afford to put the money into it. This is an awesome way to be able to make it your own. And
especially, like I said, in this market where no offense, there's a lot of average looking, but there's a lot of average looking homes on the market, let's be honest. And if you use that program, and I like to hear that they do multiple draws, because not every...
Yeah, that's new, isn't it?
It is relatively new, and not all lenders do it. So again, it's something that it's mortgage broker specific, not, every bank and lender's not going to do it. So you need to talk to your broker for sure.
Please don't interrupt me again, Steve. Thank you. What I was about to say when I was rudely interrupted there was that...
I don't want you to get out of shape.
What I was about to say, though, when I was very rudely interrupted...
What were you going to say?
Is I say these draws are a big bonus because not everybody, if it's $100,000 like Lisa said, if I'm a first-time home buyer, I've just scraped together my down payment. Yeah. I don't have $100,000 to put into kitchens, bathrooms, floors, all that stuff. But if you can get those draws, and there are some contractors out there that won't take a deposit, and you can actually get that draw, pay off that job already. So if you can get those draws, what a great program, because especially for first-time homebuyers who really can't afford that extra money on top of their down payment. So that's what I was trying to say, Steve, when you rudely interrupted me.
How difficult is it to get a line of credit, though, to do all that?
It's not always that easy.
Yeah,
I'm not going to lie. It's not always that easy. However, sometimes it's easier than getting a mortgage. So just don't get the line of credit before the mortgage. Like it's a combination. It's a package that we all want to talk about. You also don't want to have excessive access to equity because, again, some lenders will roll that into what your serviceability is going to look like.
Right.
So it does make a difference.
So you can get a line of credit and then pay off these contractors and then flip it all back into your mortgage.
Absolutely, yeah. You can do, and again, if you can do it in multiple draws, which you would want to do if you're adding $100,000 worth of improvements, you're not just going to have that cash lying around. In the past, I've had the mortgage approved, and I've written a letter for the contractors to say this client's been approved for this work to be done, and you're going to get paid net 30. So I mean, it's a great way for contractors to be able to get business if people can't or don't want to qualify for extra debt, even if it's going to be paid off. And it's a great way for anybody just to get into the market, and it's a great way to service or market those properties that aren't selling.
Well, and to get a letter from you who's actually giving them the money.
Yeah, we're giving them the money.
It's almost like I guarantee you're getting this money because, like I said, there are some contractors, if they got that letter from Lisa saying, by the way, once you've done your work, net 30, you're getting your $40,000, $20,000, whatever. It's like a slam dunk. You're getting your money. Go ahead and do the work. And a lot of contractors nowadays can hold a lot of credit themselves and do the work themselves. Some will want a deposit, but others don't need a deposit. They'll just trust a letter from a mortgage broker.
The key on it, though, is to make sure that you have I should have mentioned this earlier. The key is that you do have to get quotes from a qualified contractor for the work that you want to do. You can't just go in and say, hey, I'm going to do $100,000 worth of improvements to this house and go at it willy-nilly. You really have to have a plan. So you have to get the quotes. We need the quotes. We submit that with the agreement to the lender. Typically, it's high ratio, so it's usually less than 20% down, but the program exists if you have 20% down or more. Then the insurer appraises it as improved. So, and that's what the new mortgage gets based on.
So how do you coordinate all of this with contractors as you're looking to buy the house before you've signed the deal?
Well, it's great to have a good relationship, with your lender, your broker, and the realtor. The realtor and the broker really need to work closely because the realtor needs to know what's happening. And that usually comes from, our end. This is what we're looking at doing. And then they're in close conversations with their buyers to say, okay, I have contractors. Here's the ones that we can look at. These are the ones that will probably be able to do the work and the scope that you're looking at. And then they can coordinate to have them into the property to get them the quotes.
So you would try to line up all the contractors the same day, I guess.
Well, yeah. And we're in a different market than we were 2 years ago. 2 years ago, you're like, oh, I'd like to get my contractors in before I see this house. It's like, sorry, you have 16 minutes to make an offer and a firm offer at that. So it's a little different nowadays. You have time. Especially if the home doesn't show well. Like if you're going to look at a home that needs a lot of work, those homes are usually sitting a little bit longer, quite a bit longer. So you have time to book a showing, potentially get a contractor in there, or book a showing, make it conditional on a home inspection and a contractor getting in there to see what work needs to be done. So we're in a totally different market than we were 2 years ago. With this program probably was a bit of a struggle a couple of years ago because you had to just hope that you gave the right numbers.
Yeah, they weren't on the market long enough.
No, whereas now you can get the contractors in there if you need to, and I just wouldn't get Uncle John in there to give you a
yeah,
quote.
It's got to be a qualified contractor.
You got to be some reputable people in there to give you a solid number in order to get that money.
And it can't be for structural items, so that's important too. It can't be for things like if this cracked foundation, that's not going to fly. That's not something that's for this program. It's just really for something to customize it. Yeah, it's really to improve, cosmetically typically, or, you can put a new roof, sure, but, don't come and say, I need to do a new roof because there's, black mold. That's not going to work.
Well, yeah, you want to lend on something that's going to increase in price from the work. And even a new roof, yes, that's going to help the price a little bit, but not really. But yeah, a cracked foundation, well, you're supposed to have a good foundation, but doing floors and kitchens and bathrooms, paint and light fixtures,
just make it your own.
Those are all things that will increase the value of the property.
So you say there's no appetite for those types of properties. Are you in the driver's seat now if you're going to buy one of those properties?
We're teetering towards a buyer's market. In some areas, we're in a solid buyer's market. Usually in an area that has a lot of new home building going on, you have a lot more inventory, so it's a stronger buyer's market. An older area that doesn't have a lot of new home building has less inventory on the market. You're in more of a teetered balanced market, potentially a seller's market. But yes, buyers are, and this changes really quick all the time, but your buyers are somewhat in the driver's seat right now when it comes to properties, especially ugly properties. Gorgeous properties? No. I'm actually showing one of Petra's friends some homes right now, and I can walk into a home, and if it's done beautifully, I'm like, you literally have today to make an offer. Otherwise, it probably will be gone tomorrow. And then we can walk into some where I'm like, don't worry, you have some time. You have a little bit of time. But buyers in a lot of areas are definitely in the driver's seat right now. There's some areas that are very, very solid buyers advantageous areas, and then there's some that are sort of in a balanced market. Our numbers right now show us in a balanced market, but I question whether we're closer to that buyer's market than in a balanced market for sure.
You sure foresee us being in a buyer's market in the next few months, I would imagine.
Well, it all depends, Excuse me. I know with inflation, with tariffs, with unemployment, it screams like, okay, you got to be worried about your job and things are, getting expensive and people are losing jobs, but the rates are coming down, giving people a little bit more buying power. So, there are buyers out there that are buying. There's tons of inventory on the market. I think we're going to be in a balanced market for most of this year, probably closer to the buyer side of that balanced market for most of this year, but I don't see us going into a buyer's market. It's certain areas we're already there, but I think we're going to be in a balanced market closer to the buy side of a balanced market.
521-TALK, 521-8255. We will be right back.
Yeah, good point.
Welcome back to the show. To the phones we go. Say hello to Sammy. Hello, Sammy.
Hey, guys. How are you?
We're great.
Good morning.
I just had a question about, obviously, the tariff announcements this week. And I know I was talking to you guys a few months ago about how housing is slow. Do you guys really see an uptick in things? Because as of now, it's really still slow. And do we all go work for Clement out in the east end of Ottawa? I only say that because we work for, like I was mentioning, the Cajuns and the Mintos of the world, and things are still really slow. And I was wondering,
for contractors, you're talking about now?
Yeah.
Yeah. So go ahead, finish your question.
A lot of that is reflective on the economy. So I'm wondering, do we hunker down? Do we, I mean, I hear this optimism from your end of things. I don't know why, but
I think it's guarded optimism.
Well, it is guarded. Listen,
it's a government town, but I live in Ottawa just as much as you guys, and I don't think it's just government people buying homes. I think when Carney was talking about housing, is it more affordable housing, or is he building $1 million homes?
No, it's not going to be it's not going to be the $1 million homes. I think we're going to see a lot of tract building. We're going to see a lot of custom building. But the problem is right now, as you know, it sounds like you're a contractor, but to get a shovel in the ground is next to impossible these days. And they say that for 3-4 years, it's going to be super easy to get shovels in the ground, and it's not. In the States, you basically have to go into the municipality, show them a couple things that are like, you're good to go, shovels in the ground the next day. So I'm guarded optimistic about this market. Steve had the right words there. Our number of sales are down 3.7 year to date. So our sales are definitely down. And keep in mind, last year was not a solid year. It was an average year. So we're a little bit down where we were last year, but we're seeing lots of listings, which is very optimistic and great. And we're starting to see buying power starting to increase. So the only thing that's going to really hamper this market is going to be unemployment and when people losing their jobs. If people weren't losing their jobs, but if people weren't touching
on, if we're not going back to work in spring, that's a whole bunch of workers.
Well,
there's no kind of indication right now. If I've personally been out in the last month talking with the guys, and it's still slow.
Yeah, in your profession, yes. Keep in mind we're a government town where a lot of our workers are government, and a lot of government workers. Sure, we're going to see some constriction in the government workers if a new party comes in, or even if the same party stays in. But saying that, they're usually their jobs are quite solid, and we're a large government town. So yes, there's some sectors in the market that are going to be affected. There's others that are not. But I think.
Do you think things will pick up after the election?
Well, I do. Keep in mind, the election always slows things down, right? There's that point of uncertainty. So the election will slow things down. We are, I mean, as our company goes, I'd like to think that the numbers on the board are similar, but as our company goes, we are having some solid months. So I'm very optimistic on this market, especially with buying power becoming more affordable, more listings on the market, more people starting to buy. But yes, the only variable besides tariffs that are really, really hurting us is unemployment and jobs. And we need to make sure that we don't lose too many jobs if we want to keep this market going. If we start losing a lot of jobs, we then know that our housing market will definitely slow down.
Kind of on that note, like the Bays of the world and the tariffs just kicked in as of last week. I mean, I'm not going to count on numbers of last year or last month. The tariffs are in effect, and it's from now forward. In the next week, we've seen the economy, the markets slide down. In the next month, in the next year, is it like, do we hunker down for a couple of years?
No, I mean, we've had tariffs. Keep in mind.
I think you're asking questions no one has the answers to right now. Yeah. I mean, we're just in limbo right now.
Yeah, we're in limbo. But I will say, I mean, hunker down. I wouldn't say we need to hunker down.
It's planning.
It's total planning, and I think that we're still in a solid. I'm not blowing smoke here. We're still in a solid market. I mean, there's some industries don't believe that, but we still are in a solid market, and I think that. Yeah, there's a lot of people that are worried right now. But, he says, well, the tariffs started last week. No, they didn't. The tariffs started when Trump started his campaign.
Pretty much.
We knew they were coming.
There's more talk about it now, and that's why it's at the forefront. Yeah. And people are scared, but that's why I say planning is the most important thing.
The markets are reacting, and people are scared. More uncertainty. We will get through this. It's going to be a blip on the radar. We will get through. It's going to be a long blip, and we're going to be scratched.
But who knows? You know what? Next week he could change his mind. You just have no idea with this guy.
No idea.
Birthdays?
Birthdays, yes. Frank wanted me to mention one very, very, very important birthday that's coming up. Just the one.
Okay.
It's mine.
Oh, happy 23rd, 24th.
No, a little higher. A little higher. Okay. 52. Hey, you know what? I'm proud. I'm proud to be here. You know, getting older is something that not everybody gets to do.
When is your birthday?
April 10th.
Wow. And when is your birthday?
Yes.
I'll stop. April 22nd.
Yes, it's April too. I did know that. And I brought breakfast in for your birthday.
Yes,
so.
thank you. Thank you.
How come you look so much better at your age than Paul does?
Stephen, you have a birthday?
Yeah, I would like to wish my mom, Linda, a very happy birthday. It's tomorrow. Happy birthday, Mom.
Happy birthday, Linda.
Now you don't have to get her a gift.
I have a few. One, congratulations to Paul Rushforth Real Estate, who are 14 years in the business as of April 1st. So happy 14th year
I should have mentioned ours. We're 20 years.
Congratulations. I also have my office manager, Angie White. His birthday is today, along with Jason Craig, who's my lead inside sales agent. His birthday is today. Paul Royce, one of my agents, his birthday is today. Jocelyn's son, Nick, is his 21st birthday today. Petra's very dear friend, Jody Adler, it's her birthday yesterday, so happy birthday, Jody. And one of my BVI sailing crew, Pat Garrity, also has his birthday today, so happy birthday to Pat Garrity.
Wow, you're lucky Frank's not here this week.
Well,
all your birthdays.
I got all my birthdays in. Frank didn't interrupt me once on my birthdays, which is awesome.
Thank you, Lisa. Have a great week, everybody.
Have a great week and
to buy local.
Support local.